a company called Girik Capital, led by Charandeep Singh and his partner Varun Daga. Charandeep is stopping by in our newsroom today to talk about his strategy and why they have managed to really do very well. We'll pull up the returns which they have generated at the firm. They're called the stock pickers. They've earned a good reputation of picking stocks early in the market. Charandeep, thanks very much for dropping by.
Thanks for having me
In our newsroom today.
Thank you so much.
So, Charandeep, as I understand, the firm Girik Capital has been about, moderately concentrated portfolios. You've had, old economy stocks which you've been holding for a very long time, HDFC banks of the world. And then you have bought some new stocks as well. Let's understand your strategy of stock picking. I was just telling my viewers how you guys, that's the performance coming in on your screens right now of Girik Capital and the sectors you guys are holding in the portfolio. We've refrained from talking stocks, but we shall talk about some of the examples. But CanSlim model portfolio approach is something which Girik Capital follows. Talk to us a little more about the merits of this philosophy.
Right. Ajay, first of all, thank you to you and thank you to your lovely team here for having us. We are privileged. This is a great question about CanSlim because, this is right at the core of Girik's philosophy in equity markets. When we started our fund about 10 years ago, Varun and I thought, what's a way to differentiate ourselves? How can we be different from the street? How can we provide regular returns to the street? How can we protect downside and come out ahead of the pack? So Varun stumbled upon this strategy of asset management called the CanSlim style of management. It's run by this gentleman called Mr. William O'Neill, who's based out of the US. He's a billionaire investor. And, we were quite taken by it. We thought that this is really interesting and a very interesting way of running public money. So CanSlim essentially marries 52-week highs, stocks making new highs with new products, new services, new management, with hugely accelerating earnings. So it's really a marriage of price highs and earnings that are growing so quickly that most of the street can't catch them. So what we found is that all the winners you're seeing today, most of the companies that have been multi-baggers over the last decade, they all showed up on this CanSlim screener very, very early. So CanSlim is not just what I told you. That's the screening aspect. There's a whole fundamental aspect to it in which you have to get into the balance sheet, the cash flows, understand the management, the promoters, and do really solid bottom-up work and then value the company.
Charandeep, let's pull up the full frame graphic of your performance. The reason why I'm referring to it is because the market overall has done very badly in the last 18-20 months. That's the one-year return. Almost the mid-cap 100 is negative, but you guys are almost 9% positive.
Right.
On a 3-year basis, roughly 20%.
Right.
And on a 5-year basis, actually 20%. And 3-year basis also hugely positive. Right. When the mid-cap 100 is 6%, you guys have done double of that.
Right.
So with that kind of performance on the screen, talk to us about what calls, some of them which you have taken, which helped you hugely outperform the market and your benchmarks.
So there's a couple of aspects to it. It's more than just the calls. I mean, I would say that, our strategy has got a huge risk management side to it, which I will talk about after I talk about these calls. But, one thing we've done from the very beginning is to focus on the leaders. This portfolio, if you look at over the last decade, has essentially focused on the large leaders, the large or the mid or the small, basically companies with great leadership potential, great products, great management, and also accelerating earnings.
So if we may just take some examples over here. I was looking at your model, your portfolio actually, and we saw one large insurer there. We saw one large organized retailer there, and of course a very large private retail bank.
Sure. Yeah, so look, I think I'll add to it another one of our large something that's gone well for us is the AMC business in the last couple of years. You had a new, recently listed, very large, profitable asset management company, which we all really believe in. We've owned the bank for a while. We've actually seen the group's management. They're very leadership oriented. They have the best people and they have grown very consistently. So if you look at that AMC, that's done very well. If you look at the insurance company, again, a true leader in the general insurance space. It's been listed for the last couple of years, has been outperforming and growing extremely well, taking market share away from peers. So it's quite simple actually. You stick to the leaders, buy great companies with accelerating earnings. Got to make sure that the earnings are going well. And listen, the second aspect to this, which I'd really like to talk about, is to make sure that you weed out when you're wrong. When you make a mistake, it's extremely important to actively recognize it, acknowledge it, and move on. You're not always going to be right as a fund manager. You will make probably as many mistakes as you don't.
Right.
As long as your thesis is right, you ride your winners. Make sure you don't water the weeds. Make sure you don't average down easily without asking the tough questions. If you stay out of trouble, largely you'll be fine.
Right. Charandeep, you have earned quite an amount of good reputation, I would say, as for mid-cap stock picking. So we'll talk about mid-cap end of the market as well with you. But before that, let's get a slice of what the ace investor and of course very well tracked in the market, Rakesh Jhunjhunwala has to say about the mid-cap end of the market. He's making a strong case for mid-caps for 2020. Let's get a slice of that, and then we'll continue our discussion with Charandeep regarding the way they are looking at mid-cap section of the market right now.
See, nothing can be fixed by one action. It's a process. So a lot of government action is needed in order that the economy comes back to its growth potential. Second thing, also we have to communicate by the budget to the business community that we are on your side. We have to revive the animal spirits of the business community. And government, I think, if it removes the surcharge or reduces the surcharge, it will really help in getting back the sentiment. So government has to do some action by which it conveys to the business community that we are on the same side.
But are markets expecting, in your view, something big from this year's budget?
Well, I don't think they're expecting anything negative. I don't know positive, right? But there is no retail or public participation still in the market. I am personally hopeful it will come after the budget.
But in your view, STT and LTCG, can they coexist?
They should not. Nowhere in the world do they do. So if the government, best thing is government abolish one of them. I think long-term capital gain is better because STT, the government gets the money, 10,000-12,000 crores from 2 exchanges without any administrative cost, right? So I think it's better if we abolish long-term capital gains. If government cannot abolish it, make it 1 or 2 years.
Your budget is all about taxes. So I have to ask you another follow-up question on taxes, which is that direct dividend tax. Is that a draconian tax?
Well, I think the 20% dividend tax is not draconian, but the tax put on dividend income is, according to me, not needed.
So if there is a change on LTCG and direct dividend tax?
No, direct dividend tax is most undesirable. But again, you have to, then do TDS, then collect the income. It is administratively a nightmare. This tax which the companies pay, I think, is much more convenient. But then anybody who has unit income of more than 10 lakhs has to pay tax. I think that's unjustified. Because you have a 25% rate of tax, then you pay 20%. Again, you pay 10%, that becomes very high. So I think 20% rate of dividend distribution tax is okay, and I don't think we should tinker there.
What is the screen telling you, sir?
Bye.
What could be the worst case scenario for the Nifty in this year?
See, it depends. Tomorrow, if there is an Iran-US war, it could be 9,000, 8,000. But normally, I would think that 11,000, 11,200, 400 will not be violated.
Between the Bank Nifty and the Nifty next 5 years, where do you think there is scope for greater outperformance?
Well, I won't say about the Nifty and the Bank, but stock-wise, there is surely perform. There is scope for outperformance by non-financials also.
The last time when we heard you bullish or extremely bullish on small and mid-cap stocks was actually in 2012. And your words were, "Itna sasta maal mil raha hai, lag raha hai chori ka maal mil raha hai." Are we reaching that kind of a level for mid and small cap?
That I will say not. I will not say in general, but stock-wise, I think there are a lot of opportunities.
Right. So that was the big bull about the markets. He's saying that the screen is telling him that this is the time to buy, and 2020 could turn out to be the year of the mid cap and the small cap. Charandeep, you have a value strategy as well,
right?
Which not necessarily, but smaller companies fall in that category. Tell us value versus the CanSlim earlier one, the multi cap strategy. How do you differentiate between the two strategies, and how do you stock picking in this end of the
very good
strategy?
question. I'm glad you asked that. It's a very different style. It requires a very different mindset as traditional value investing. You're talking about looking for and identifying businesses that are inherently strong, that are disliked, just grossly undervalued and disliked by the market for numerous reasons. Now, if you look at something very simple, this is a simple example that I'll give you. If you look at the PSU banks, if you look at the public sector space in general, you will not find much money made there in the last decade. So these stocks are trading at not only low PEs and price to books, they also, as we all know, have a large potential to earn more money than they are because they're potentially undermanaged. Secondly, people think the government's going to keep selling these down, stake sales are going to keep coming. So you're getting these at abysmal valuations. Fund managers do not want to own them. So call this an opportunity or call it a value trap. Time will tell. In our experience, for these ideas to play out can take years. It's just that when they do play out, they can be extremely rewarding. So PSU is a good example of where you can go value hunting today.
Sure. And this is an area not everybody, can muster the courage to really go for.
Yeah, because it doesn't show you returns every month.
Okay, let's talk about two different areas. And just for example purposes, I'm taking the names added in your portfolio recently. One is a hospital stock, and the other is a QSR burger chain.
Right.
Talk to us about why do you like these spaces? Because the hospital stock, the recently listed one, may have done very well in the medium term or the short term. But the QSR one has really not done a whole lot. And now the Burger King, one of its peers and competitors, is also about to get listed.
Right. So, the QSR business or the burger business that you're talking about is, as we all know, really good brand, market leader, taking market share constantly. I think the reason why it may not have done well is because they're in a huge build-out phase. What you're seeing is lots of store openings, opening cafeterias within stores, huge amount of capex and opex. See, building a restaurant business is not easy. Ask anybody who's built a successful restaurant business, the amount of risk involved, the amount of costs involved, etc., very high. So we're going to stick with our guns here because we believe that if you look 5 to 7 years out, it could be a very compelling story, and the growth story is very secular. Second thing is that it's very organized, well run, and we think that organized will get larger over time and keep taking share from unorganized players. So this becomes a compelling story to us. As far as the hospital / it's actually a diagnostics company.
Sure.
Again, we think that unorganized market's very large. This is a great leading Western India brand. They've spent a lot on branding, building out network, and the benefits are showing in operating leverage and volume growth. And we don't see that changing anytime soon.
One last question, Charandeep. I have to ask you, because you are somebody, the firm has really seen cycles.
Sure.
Be it cycles in the economy or in these large companies, the banks you've held, the insurance companies, etc. Where do you see the market cycle right now? The breadth has just started improving.
Yeah.
Do you think the case for the mid-caps is starting to build, or do you think it will only happen when the economy starts is repaired and that starts moving? Only then the broader market will perform well.
This is a really good question again, because just this morning at our firm, we were looking at which are the biggest winners of the last 2 years. So, I'm no expert on markets. We're very bottom up and we're real stock pickers. We pride ourselves on that. We're not market people. But what I have seen is what I can share with you is that in the last 2 years, which can possibly be technically qualified as a bear market for the broader market, there are at least a few hundred stocks that have handsomely beaten the index. So whereas most people think that it's only those 10 or 15 names that have done well and have taken the index higher, there's actually scores of names outside the index that have even been multi-baggers. So people are missing the trick. It's already deep, it's already broad, and I think that hopefully it continues. But, by focusing just on the poor breadth or on the losers, people are missing winners.
Right. All right, Charandeep, thanks very much for dropping by.
Well, thank you,
and
Ajay.
look forward
Thank you,
to
pleasure.
more of you on the channel.
Of course.
Thanks very much for your time.
Thank you. Privilege. Thank you very much.
Right.